Hey everyone, welcome back to Gold Off the Charts. They say a little financial insight every day is the difference between being a leader or a follower on the road to wealth. If you opened your trading apps today and looked at the US dollar index, you probably did a double take. Just this past month, the dollar hasn't just slipped. It's experiencing what I can only describe as a total avalanche. Why am I dedicating an entire video to an in-depth analysis of this specific crash? Because for most people, this feels impossible. What have we been told for the last few decades? We were taught that the dollar is the ultimate safe haven. The more chaotic the world gets, the stronger the dollar becomes. But look around. The world is clearly in chaos, yet the dollar is being sold off like crazy. According to the latest data, the US dollar index decline has hit staggering double digits throughout 2025. Since December began, this sell-off has turned into a panic-buying frenzy for everything else. Meanwhile, look at gold. It's like a silent giant standing on the ruins of the dollar, hitting one historic high after another. A lot of you are asking me, is this just a technical pullback or a simple sector rotation? If you're still thinking in short-term trade windows, you are likely making a massive strategic mistake. Today, I'm not going to bore you with complex technical indicators or K-line charts. We need to zoom out. We're going to look through the fog of 80 years of history to dismantle a capital drama that is quietly unfolding, one that will decide your wealth and destiny for the next decade. We need to put our ears to the ground and listen to the literal cracking sounds coming from the foundations of the global financial system. Because the dollar empire that has ruled us for 80 years is fracturing from the inside out. The world's smart money, the central banks, is dumping U.S. Treasuries and hoarding gold at a record-breaking pace. What do they see that the average person doesn't? In today's video, Gold Off the Charts is going to expose the three major cracks in the US dollar's credibility. I'll explain why gold is reclaiming its throne as the ultimate anchor of global wealth. This might be the most important wealth preservation blueprint you'll hear all year. Of course, a quick disclaimer, this content is for educational and entertainment purposes and does not constitute financial advice. Now, to understand this crisis, we have to look at how we got here. How did the dollar become the world's undisputed leader? Let's rewind the clock to 1944. World War II wasn't even over yet, but the United States was already taking center stage. Hay gathered their allies in a place called Bretton Woods to decide the future of humanity. The rules were simple, if a bit aggressive. The US told the world, your currency is pegged to my dollar and my dollar is pegged directly to gold. Hay gathered their allies in a place called Bretton Woods to decide the future of humanity. The rules were simple, if a bit aggressive. The US told the world, your currency is pegged to my dollar, and my dollar is pegged directly to gold. However, behind this genius design was a fatal logical flaw that economists call the Triffin paradox. Think of it like this. If you open a bank, you have to issue certificates of deposit, the dollar. But because the whole world needs dollars to trade, you have to print way more paper than you have actual gold in your vault. Eventually, everyone realized the math didn't add up. People started wondering, if we all show up at once, can this bank actually pay us? Sure enough, by 1971, countries like France weren't playing games anymore. They literally sent a warship to US ports and said, keep your green paper, we want our gold back. The US realized that if every country staged a bank run, the nation would be broke in a week. So President Nixon did something incredibly bold, and some would say rogue. He went on national TV and announced the dollar was decoupling from gold. Basically, we aren't trading it back anymore. Logic says that if a currency loses its anchor, it should go bankrupt, right? But this is where the US played its strongest card, the card that kept the dollar alive for another 50 years. Oil. Shortly after decoupling, the US struck a secret deal with Middle Eastern oil producers, specifically Saudi Arabia. The US will provide the military protection and keep your monarchy safe. In exchange, you have one job. All oil must be sold exclusively in US dollars. Folks, that was the birth of the petrodollar. It was a stroke of genius. But that was only the first half of the game. The US then said, you've got all these dollars from selling oil. Don't just let them sit there and lose value. Lend them back to us by buying US Treasuries. We'll give you interest and the best liquidity in the world. Do you see the cycle? It's a perfect closed loop. The whole world wants to buy oil. It's what their industrial economies need, right? Then you have to exchange dollars first. Oil-producing countries sold oil and came away with a handful of dollars to buy U.S. bonds. The U.S. prints green paper for oil, then borrows that same paper back to fund its military and its deficit. This oil-dollar treasury cycle became dollar hegemony too. The U.S. essentially unlocked an infinite money glitch to collect taxes from the rest of the world. To keep this system locked down, they built 4 massive pillars. First, the military. With over 700 bases worldwide, they could enforce the dollar status. Second, the economy. A massive consumer market that everyone needed to sell to. Third, tech. Holding the keys to semiconductors and the internet. Fourth, the payment system. Specifically SWIFT, the on-off switch for global money. With those pillars, the US sat comfortably on the global currency throne. But let's bring it back to 2025. You'll see that this once indestructible fortress of global dollarization is starting to crack and crumble. This isn't doom posting, it's reality. The assets that used to support the dollar are now becoming its biggest liabilities. Look at the military pillar. The US is suffering from classic imperial overstretch. From Ukraine to the Middle East to the Asia-Pacific, the front lines are just too long. The result? The 2026 defense budget is projected at a staggering $1.01 trillion. This astronomical amount of military spending is creating record deficit spending, aka debt that must be repaid while experiencing an industrial hollowing out. U.S. manufacturing is now less than 10% of GDP. If a country only relies on financial markets and handful of tech giants and doesn't actually make anything, how long can its currency stay on top? U.S. tech companies have been the main source of growth, but the chip wars have been a double-edged sword that hurt rivals and raised prices for local buyers. By forcing giants like Nvidia and AMD to cut off markets, the U.S. is starving its own companies of R&D cash while forcing rivals to innovate faster. Finally, the payment pillar SWIFT. This might be the biggest strategic blunder in history. When the U.S. froze Russian assets, the rest of the world realized, our money isn't safe here. It could be deleted at any moment. Now, Plan B options are everywhere. The BRICS pay system, digital currency bridges, and the RMB SIPs. Everyone is desperately looking for an exit ramp to bypass the dollar. If those cracks start to speed and the U.S. national debt continues to grow without slowing, then it's on a crash course. U.S. debt has already officially crossed $38 trillion. For context, that's way more than the entire U.S. GDP of $30 trillion. The country owes more than it can earn in a year of hard work. But here is the real kicker, the interest. Because interest rates stayed high to fight inflation, the U.S. now pays over $1 trillion a year just in interest. $1 trillion a year. Remember that 2026 defense budget of $1.01 trillion? The U.S. now spends more on interest payments than on its entire military combined. It's like maxing out your credit cards and realizing your entire paycheck only covers the interest the principal never moves. So what do? You get a new card to pay off the old one. That is a national-level Ponzi scheme. With a monthly deficit of $300 billion, this isn't just me being a critic, it's simple math. His is why S&P, Fitch, and Moody's have all downgraded the U.S. outlook. The referees of finance are blowing the whistle. U.S. bonds are no longer risk-free. Let me know in the comments. If a borrower owed $38 trillion and had to take out new loans just to pay the interest, would you give them your life savings? The market is already voting with its feet. First, foreign investors are dumping U.S. Treasuries. Ownership has dropped from 30% down to roughly 24%. Second, central banks are dumping the dollar. In 2001, the dollar made up 72% of reserves. Today, it's down to about 52%. Third, look at the seesaw with gold. Back to the 2025 market we talked about at the start. Since the beginning of this year, the U.S. dollar index fell by double digits. What about gold? Gold futures have surged nearly 70% from the start of this bull run. What does this mean? The market is literally betting on the bankruptcy of the dollar's credibility. The weaker the dollar's trust, the higher the value of gold. The U.S. dollar is losing ground on 3 sides, from cracks in the petrodollar, excessive spending, and high interest rates driving up national debt. The logic is clear. When the safe asset becomes the risk asset, smart money moves to what has been real money for 5,000 years. Gold doesn't rely on a government's promise or a bank's credit. If you hold gold, you don't have to pray that the US government doesn't default. Gold isn't getting more expensive, the dollar is just getting weaker. Gold is becoming the natural alternative to a devaluing currency. According to data from the World Gold Council, central banks have bought over 1,000 tons of gold for 3 years straight. That's a third of all annual mine production. They aren't day trading, they are strategic hoarding. They don't care if the price goes up or down, they are super buyers looking to hold long term. In a 2025 survey, 76% of central bank governors said they plan to increase gold holdings. This is a global de-dollarization movement. Is it starting to make sense? It's not simple risk aversion. This is a change to the global financial system. We are living in an era of high uncertainty, trade wars, geopolitical shifts, and every actor looking out for their own interests first, from traders to central banks. In this world, gold is the ultimate insurance policy. The script is written, the dollar is fracturing, and gold is reclaiming its position as the anchor of the financial system. This is a fundamental shift after 80 years of U.S. dominance and the U.S. dollar as the global anchor of international finance and trade. For us ordinary investors, we don't need to know the ins and outs, but we do have to follow the trends. For us, it's simple. Wealth is moving from paper promises to real assets. If this breakdown helped you see the truth today, please subscribe, hit that like button, and share this with your friends. I'm Gold Off the Charts, stay smart, and I'll see you in the next one.